I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. It is the Mortgage Brothers podcast show. It is June 30th. It's Thursday, and we're located right here in Phoenix, Arizona.
And this is the interest rate update.
And if you're new to the channel, be sure to subscribe, comment, and like. And remember, folks, this is for informational purposes only, not financial advice.
That's right. We're smart folks, but we're not that smart. But we are kind of smart.
Okay, right into it. 30-year fix today. We see a little bit lower than yesterday. 5.125. The 15-year fix at 4.375.
I'm feeling a little left out. No change on the FHA and VA. Same as yesterday. 4.625 for the FHA, 4.625 for the VA.
These quotes come with no points. There's no extra fees. They're based off of these assumptions for conventional FHA and VA loans. Again, there's no extra fees.
That's right. Nothing else hidden. There are standard closing costs like you have with anything related to financing. There are closing costs, but there's nothing extra. That's the point.
Okay, so I'm going to go back right here to this chart again because someone had commented recently, and we were showing what the average interest rates were in the country, and they were higher. The average interest rates that are quoted are higher than what you'll see right here. These are the interest rates that today we're just showing you what interest rates that we would be quoting.
That we're able to do.
Yeah.
That's right. Yeah, you call us today in the next, 20 minutes, as long as the market doesn't change, this is what we would be able to quote you based upon these scenarios.
Yeah, so these scenarios for conventional FHA and VA would receive quotes right about here for the 30-year 15, on the conventional and the FHA and VA. All right, so and our interest rates, we're mortgage brokers. Most of the time, we're going to be lower. Typically, I would say about 0.5% to 0.3% lower than the average bank.
It's just easier for us to get better pricing when you have a multitude of wholesale lenders you can go to, and for that particular scenario, find the lowest price lender. I mean, that's like, imagine if you could buy hamburgers that way, line up like 10 restaurants and say, which one has the cheaper, double patty burger? That's how we do it.
That's right. So, real big kind of high-level picture here for the 30-year fix. Since 1971, interest rates peaked. They started, in 1971, they were about, about 7%, and they went up to 18% in 1981, and then got stuck in this channel from 1986 to March of 2022. That's when they busted out. Now, these interest rates, our country is so addicted to debt, right? We print our way through wars, recessions, and everything. We will likely be printing again, and rates will likely go down again.
Mm-hmm. I remember drawing a little comic strip showing the U.S. being the actual patient, and the IV bag was low interest rates.
Mm-hmm.
I mean, it has fed us for so many years.
Yes. And so right now, interest rates are higher than they have been these last, over the last decade. These are higher rates, but over the historical period of really 40, 50 years, these are really still low rates. But again, I do think maybe 12 to 24 months, we could likely go back into this channel. So no matter how even if you are getting interest rates here in the fives, this is the chance of you being able to refinance in the future down into the 3s or 2s is very likely.
Right, yeah. We actually heard something the other day, which I thought was great, where we're going to date these rates. We're not going to marry them. So we're hoping going to be a short-term kind of lock period. So don't get depressed if you think this is your rate for the next 30 years. We don't think so. I mean, it could, because again, we're not financial advisors. And what else do we say? We are good at what we do, but this financial advice is tough. So we don't want to tell you they're going to be coming down, but likely they will.
Yeah, in our opinion, based on what we see. And we want to just quickly remind everybody that a loan estimate, it's a federal disclosure. It's 3 pages long. It's given to borrowers, whether you're refinancing or purchasing a house. And it is 3 pages. And we want to make sure that we'll be happy to review these loan estimates for you. Of course, if you're, getting financing in Arizona, that's where we're licensed. But right now, there's 3 pages to the disclosure. The most important, there's 2 really, really, really important parts that we're going to point out to you now. It's where the interest rate is, okay, on page 1, and on the top of page 2, whether or not you're paying any extra points. How much is this actually being how much are you being charged for it?
Right. And when you see loan costs, that could also be replaced with like, for the most part, well, we can't say lender costs. Look at all these different categories. It'll make your mind kind of like explode.
Mhm.
But this is what the lender is charging for basically your interest rate. Doesn't include the appraisal and all the things down below. But what are the costs for the interest rate? That's where you're looking.
And right now, we highlighted, you'll see these are just the bold line. Origination charges, $1,050. That's the sum. That's the total of all fees in this rest of this block. So again, in this block for 5.375, the total charges from the lender would be $1,050.
And that's made up by an origination fee, or they call it the underwriting fee, or they call it an admin fee. All lenders will have that fee, and it's about that much. What we're looking for is the line just above it. Are there points? Is it 0 there, or is it a big number?
All right. We're going to be back tomorrow with another update. Everybody be sure to comment, like, and subscribe.
All right. Thanks a lot, folks.
Thank you, everyone, for watching our show today. If you have questions, be sure to email us at rates@azmortgagebrothers.com, and be sure to take a look at all of our other videos on our channel.